Have you ever wondered what the ultra wealthy are actually doing with their money that nobody talks about? Well, this strategy is hiding in plain sight and has been used for over a century. Now, you probably heard of people like the Rockefellers, right? And Walt Disney and other elites. They actually used one particular strategy that we call whole life insurance, right? It sounds boring, right? We talk about infinite banking on this channel a lot, but whole life insurance is what they've been using. Now, this is the most boring thing ever, because I remember when I was a financial advisor and I started talking to real estate investors and they were talking about how wealth is created, they bring up whole life insurance. I thought, come on, really? That's like the worst thing ever. Now, I didn't know this firsthand. This is just what other financial advisors told me. Like, whole life sucks, never get it, never use it. In fact, tell everybody to get out of it, cancel their policies. But as I started to really research deeper and do my own thinking, use my own brain instead of letting the financial advisors tell me what to do, here's what I found out. This is what the ultra wealthy have been using forever. In fact, whole life insurance has been around longer than your 401k plans. It's been around longer than even term life insurance. It's been around for hundreds of years, literally. And so for the longest time, this is actually what people used all the time. Now, some people might say, is this outdated or not? Well, maybe, maybe not. And here's why. Because the great thing about whole life insurance, it's not just a death benefit, although this is one way that the Rockefellers did pass on all their wealth. But it's got this tax-free savings account inside of it that's paying right now like 6% a year. So think of it, it's like a high-yield tax-free savings account that you can use for whatever you want, accessing it whenever you want. This is what guys like Walt Disney used, right? This is even like JCPenney's. You guys remember that department store that now has gone bankrupt? JCPenney's, during the Great Depression, was able to pay their payroll using their life insurance. We've also had companies like Pampered Chef. If you don't know what Pampered Chef is, your wife probably does, right? Pampered Chef products, that company, the seed money was started using her whole life insurance policy. She was using her policy as the seed money for that. Walt Disney, what did he do? Walt Disney, when he wanted to start Disneyland, nobody believed in it. Banks didn't want to lend him money. Nobody wanted to give him the money. There was a struggling network called ABC. You might have heard of it. Them and Disney have partnered up and destroyed our Star Wars dreams and everything else. But back in the day, ABC was a struggling, up-and-coming network. They were saying, listen, well, this sounds like a good idea, this whole theme park idea apparently with no alcohol. That's not true anymore. But back then, it was like an alcohol-free park for families that was family-friendly. They're like, that doesn't seem realistic. But they said, listen, Walt, if you come in with some of the cash, we'll come in with the rest of the cash ourselves. So Walt did this. He sold off a vacation property, and he used the money from his life insurance. He used the cash value, that tax-free savings account. He got money from that as collateral to use. So then ABC would come in with the rest of the money. And now we all smile and get freaked out having to wait in line for an hour and a half. And we love it, right? It's the happiest place on earth to wait in line for an hour and a half, right? That's what we were able to get. That made his dream come true because he had that cash available. This is what the wealthy do. The wealthy realize that it's not just about set it and forget it. It's not just about throwing your 401k and let it sit there. By the way, have you ever seen somebody get on the news or get interviewed? They're like, how did you create your wealth? I max funded my 401k plan and got the match from my employer. Said no one ever, right? That's never ever happened. That's just not the case. It's not true. No, these guys want to create wealth now. So you got to have cash liquid and available. This is what I learned for myself. When I started to understand that, I realized, wait a minute, I can actually use this money to go and invest in real estate. I can use this money to invest in my own business, create higher returns in my business, even get some tax benefits, and then use that money to create more money. This is what infinite banking was really about, was moving your money, creating that movement of money, flow of cash. This is what the wealthy do. They don't just let their cash sit there and let financial advisors gamble it away for you. No, they actually take their money and they make more with it. Whether they're actively investing with it, whether they're passively investing with it, they're making more with it. That's what they do. And on top of that, there's a death benefit that goes with it too. If that weren't enough to have this tax-free savings account paying you 6% a year, which is better than any high-yield savings account out there today, better than CDs, and those get taxed anyways, and it's safer, as safe if not safer than the bank, because they've got more guarantees behind them, and banks take bigger risks than an insurance company do. On top of all that, they've got a death benefit. And this is what the Rockefellers did, because the Rockefellers said, we're not just going to set it up on ourselves, we're going to put it on all of our kids and grandkids, and everybody's going to have their own insurance plan. And what's going to happen is that money's going to pay back in to the estate. So they set up a trust, they set up with their attorneys, the trust and the estate planning, and then they have all the life insurance pay into that. And when those kids want to get money, they don't just get their little trust fund baby cash that comes out. No, what they do instead is they say, listen, you can come get this money, but you got to borrow. You got to borrow from it, which is what people do with life insurance anyways. Borrow from it, in this case, borrow from the estate and pay it back with interest so that the money comes back in versus just blowing your money away like Anderson Cooper's grandparents. By the time Anderson Cooper got that massive wealth that his grandparents had created, he only got $100,000, right? No, the Rockefellers kept building and growing their wealth because they set up the death benefit, and when you took out cash, you had to pay it back with interest. They were cycling the money, putting the money in motion. That is the key that all wealthy people use. And the infinite banking, the whole life insurance, is just the central theme of what they're able to use as part of that. And by the way, as a bonus, when the stock market tanks, you don't lose money because it's not based on the stock market or any of that kind of crap like Universal Life does too, which by the way, Universal Life is not infinite banking. So this is the thing, you can use this like your own family bank. And you can create money right now while it's safer and it's there when you need it the most. Okay, if you want to learn a little bit more, you want to go a little bit deeper down this rabbit hole, not just like and subscribe our video here, but also check out this next one that we got queued up for you right now.